Welcome back, ladies and gentlemen, to the All in Crypto podcast. I am your host, Rupert, and today I am delighted to be joined by Zach Bradford, the CEO of one of the largest Bitcoin mining companies in the world, Cleanspark. How are you, Zach?
Hey, I'm doing great. Thanks for having me on the show today.
Yeah, the pleasure is all mine. I can imagine you're a very busy man on the back end of what was announced over the past 24 hours. I think it's about 21 hours old now, the announcement of the completion of the $650 million of convertible notes, which I'm sure we're going to get into. Really, where I wanted to start is with the kind of Bitcoinization. I think that's a good word for it that we're seeing across the world, but certainly in the US, which of course is where Cleanspark is based. We're seeing corporations start to allocate Bitcoin to their balance sheets. We're seeing institutions start to offer ETFs and other products around Bitcoin and the space more broadly, but predominantly Bitcoin. And we're now hearing talks about governments looking to essentially create strategic reserves of Bitcoin. Surely, as the CEO of one of the largest US Bitcoin mining companies, this has all got to be very exciting for you. And I just wanted to get your thoughts on everything going on right now.
Absolutely. No, it's definitely an exciting time in the space. So, we're viewing it as we're getting to this hyper Bitcoinization right now, where you have, as you said, corporations adding to balance sheet, countries adding to balance sheet. And when you look at the underpinning value of Bitcoin as, for lack of a better term, but I'm going to use it, the digital gold, scarcity is a big part of that. And what we're seeing happening is that supply and demand curve is getting affected in a very significant way, where not only are countries and companies looking to add Bitcoin to the balance sheet, in addition to individuals owning it, but you have a lot of those that have very long-term views. So they're not coming in as a trade. They're coming in as a true store of value, where they have plans. Some companies, they buy Bitcoin and say, hey, we've got a 3-6 year plan before we even look and remeasure, because we believe in the directional view of Bitcoin. Then you also have individuals like Michael Saylor, who he says he's never selling Bitcoin. And so when you look at what that's going to have on the supply shock, this is something we've been talking about for a while. My prediction since early last year was that we would see the supply shock between September and January of this year. I didn't nail it right on the head, but
Pretty close.
We've gotten into where we needed to be. And so we spent, the last several years, but the last year in particular, really pushing our growth to be positioned when we thought that supply and demand curve would be affected meaningfully. I also think this is going to help Bitcoin too, because with these large holders of Bitcoin entering the space that have very long-term views on Bitcoin, Bitcoin's always had a cycle. It's 2 years of plenty, it seems like, and 2 years where, the sky kind of falls right before it heads back up. Generally an 80% retrace even. I think that we're going to see higher highs, and the lows are going to actually be much more moderate, because instead of, there's just going to be so much of that supply that's going to be held in really strong hands that have a 20-year belief on Bitcoin rather than a 90-day view on Bitcoin. So again, incredibly exciting time to be in the space for sure.
Yeah, there's so much going on. I mean, it seems like I know both myself and yourself have been in the space for quite a while, and actually at a certain point, all of this would have seemed very much like a dream that is now becoming a reality. I mean, I still have to pinch myself on a daily basis, just how far things have came. And really interestingly, and why I really wanted to get you on the show is because Bitcoin mining is essentially the lifeblood of what is increasingly becoming a very important part of our world. And I in some senses, think that there's going to be kind of a bit of a war going on in regards to actually remaining dominant over the mining of the Bitcoin network. And this is where I think Cleanspark and a lot of other sort of US crypto mining companies are going to come in, or Bitcoin mining companies specifically, in regards to enabling the US to remain dominant in what is just becoming very important. If Bitcoin is truly on, and it very clearly is, a path to becoming a global store of value, a digital gold, like you say, actually the maintenance of that becomes everybody's problem. certainly the US's problem. I mean, the US ETFs alone have 1.2 million Bitcoin in them. They just overtook Satoshi's wallet. I think we're only going to see that accelerate and the kind of gobbling up of Bitcoin take place. Very interesting there what you also talk about in regards to the path that Bitcoin and its price typically follow, all centered around the halving. It's very feast or famine, with 2 years of enjoyment and kind of 2 years of, we've got to try and convince everybody that this space is worth paying attention to once again. Do you kind of envision in the future with the gobbling up of all this Bitcoin, that's going to become less and less of a thing and there's going to be more of a steady sort of growth within Bitcoin's price? Is that sort of what you're looking at there?
Yes, it is. And, I think that we're going to have a period of heightened velocity of that increase. And then I do think that volatility, which is actually good for a long-term investor, right? Everybody can, and again, I hate using the comparison, buy a bar of gold and kind of know, because it's been around forever, that it's going to have some sort of value over years, right? Whereas with Bitcoin, everybody's worried about volatility. And, it's up 4,000 one day and down another 8,000 the next day before it goes back up 15. That was just last week. And so when you look at that, I think that we'll have this velocity that brings it up to a much higher value. And it may take 8 years to do that. And then I think the volatility kind of tapers while the value still builds. It'll just be kind of this constant, steady push up. And again, it'll be supply and demand. The fact that, every 4 years the halving means there's less Bitcoin put out in the world. And, the analogy that's often, brought out there that said if every millionaire in the world wanted to buy a Bitcoin, they wouldn't be able to do so because there's not enough to actually have them buy. And so I think you're going to end up with, it's not just millionaires, it's every company. Every bank wants to have some Bitcoin on balance sheet. Supply and demand is going to change. We're going to, we could be sitting here in 8 years and we could be talking about sats, how Bitcoin's divided down into rather than a full Bitcoin because that number just seems so big.
Yeah, it's very exciting. It's certainly a really exciting. And that's why I really wanted to start with that question, because it very much seems like we've taken that leap forward. And the last kind of thing for me to ask you on all of that is, do you see Bitcoin as some sort of a matter of national security? Because I very much do. If the government's going to hold it, there's going to be the largest institutions within the United States that hold it. Bitcoin mining very much to me seems like of the utmost importance. Maybe saying it's a matter of national security might be a step too far, but that's very much how I see it. Do you share similar views yourself?
I do think it's going to be incredibly important as, the concept, because ultimately transactions happen through the Bitcoin miners. And it's part of the most important part, in my opinion, in the security protocol of how this all pulls together, right? And so if we were to have another country outside the US become the dominant player, there's a world where they can start to control and block transactions from different places. And so it's not only good for Bitcoin to have it all over the world, but it's also good for the countries that want to have, long-term strength in Bitcoin to be a meaningful percentage of that. So right now, the publicly traded companies in the US, I think we make up about 25% of the network. Now, there's obviously private miners that even push that higher, but just that much, I think, is going to be something that, I look at. I'm sure the government is looking at it and well aware of it, because keeping that percentage, 25% or better, I think it's going to be important long-term to ensure that, whether it's the US ETFs or just individuals in the US that want to transact in Bitcoin, have easy access and the ability to do it, because 1 out of every 4 blocks that get solved will ultimately be in the US. So nobody has to worry about, waiting around for days because there's only 1% of, mining in the US and everyone else is blocking US players. Again, that's a world I don't think will ever happen, but I think it's something that if you're, looking at statecraft and how the world could work, I think that's something that people pay attention to.
Yeah, I think it's extremely interesting. Again, one reason we were so excited to have you on the show is because Cleanspark are nothing short of killing it, certainly in the sort of Bitcoin mining race. It's a company we've taken a lot of interest in and we're very hopeful for in the future. And what I really like about Cleanspark is you've got a clear kind of plan, quite an aggressive one for actually growth of your Bitcoin mining abilities. And I think that differs from some other companies out there that are really just focused on maybe capturing short-term appreciation. Cleanspark very much seem to me to want to have, again, a longer plan on actually how do we grow our company to be able to produce as much revenue and value for the shareholders as possible. That's just how I see it from an outsider's kind of perspective. And we'll get onto the expansive side of things when we talk about the convertible notes. There's some people that might not have heard of Cleanspark. What I'd really like is for us to just explore Cleanspark as a company and your unique approach to Bitcoin mining.
Yeah, so we founded Cleanspark as it exists today, going on 11 years ago. But halfway through that journey, we moved into Bitcoin mining. But where we're at before is we were in the energy space. So I like to think of us as energy professionals that learned Bitcoin mining rather than Bitcoin miners who needed to learn energy. The reason that's so important is because energy underpins everything we do. The New York Times headlines would love you to think that we're boiling the oceans because of how much power we're using. The reality is Bitcoin miners are incredibly adept at taking power that would otherwise go unused or is stranded somewhere and turning it into Bitcoin. And for me, that was my aha moment was, we were doing microgrids for military bases and data centers. And what that means is it's, pockets where power is hard to deal with, but it's very hard to actually make these projects pencil. On the flip side, you take Bitcoin mining, where you can take basically the power that exists in, wherever you're at and turn it into Bitcoin. There is no better payback from anything I've ever looked at. And so that's how we got into it, is we actually acquired a data center that we were evaluating for an energy project. And from there, I actually gave a speech in February of 21 that I referred to us as the last kid on the bus, because Bitcoin went from $10,000 when we bought the data center to $40,000 in the space of about 30 days.
Wow.
It was the first really big push up. But what we did is we have taken a counter-cyclical approach to our growth. We haven't always grown as the times other people have been growing, because we believe in growth during the bear markets. And so, because it's cheaper, we're highly focused again on that return of capital to shareholders. And so, we're now the second largest Bitcoin miner of all the publicly traded miners, after being the very smallest. We are amongst the top 3 lowest cost to mine of all the miners. But we've always pushed for that one. We're, top 2 in efficiency of all the miners. What you're going to notice is I didn't say number 1 at any one of those things, although there are things we're number 1 at, but I'm using it as a point. We actually believe in being the vector points, not doing what I'll refer to as selling the farm to chase a headline, to chase a single statistic, to be the biggest. All of those things are not valid business reasons to do things. But again, if you can be at the intersection point of efficiency, power cost, scale, all of those pieces coming together, we can deliver better returns to our shareholders. So that's been our focus. And in order to do this, there's a lot of, underpinnings of it. We have 28 data centers now. But what you're also not going to know, and I think you're alluding to this when you talked about how other people are viewing it, is as soon as HPC and AI seemed like had a better shareholder response, they announced projects. We used to talk about in our boardroom, and amongst my team, I used to tell everybody, we just need to wait till Bitcoin's cool again. And that's an oversimplification of a lot of analysis that was going on. But we did evaluate it. No projects that we saw come across our table, and every Bitcoin miner seen a project for HPC come across their table, had the payback or economic benefits that Bitcoin mining had. And I'll put the argument out there that anybody that announced an AI project, with the exception of one other miner, it was to chase a headline. It wasn't because there was some amazing opportunity out there for them to pursue. And again, short-term benefits and stock price, ultimately, that announcement will have to come back to nest. and it'll either result in something that maybe is good for the company, but for several companies out there, it's going to turn out to be a headline, and they'll have to, deal with the consequences of that. We are 100% focused on Bitcoin mining. I think we're the only pure play that's only Bitcoin mining, that doesn't have some other side thing going on. And we're doing it because we're good at it, and it's what we're best at, and it's what's delivering the best returns to our shareholders.
Yeah, I absolutely love that. It really echoes, my kind of perceptions of Cleanspark going into this interview, and really just confirm them. When I look at Cleanspark, it really is sort of a Bitcoin mining company. It's not trying to chase any headlines, like you say, because when you look at mining facilities, they do kind of look like data centers and things like this in many regards. So you can see how people would have made that shift, but staying on the cent, not chasing headlines, I think is going to pay dividends. And I think that's really going to perfectly bring us on to what was announced yesterday. And that was the closing of essentially a convertible note to the tune of $650 million. That we're going to sort of start on by explaining what that is. Hopefully, in doing so, clear up a lot of questions that people have out there on the back end of it. But also, true to your kind of ethos of being focused on Bitcoin mining, actually, from what I've seen so far, and you're the perfect guy to clear all this up, the money that's going to be generated from those sales isn't going into even buying Bitcoin. It's actually going into increasing your capabilities as a Bitcoin mining company, which I absolutely love. But let's start things off on the kind of convertible notes. Yeah. What exactly is going on there for people that might just be hearing about this for the first time, or that have heard about it and don't quite understand it?
Yeah. So this industry has largely been built using equity capital, or the Bitcoin you mine, turning back into dollars and, building your business, paying your bills. And that's been the right type of capital for a long time. But the market has emerged, and, convertible bonds like this have been around for a very long time. But if you look at managing our capital stewardship, and then you look at managing credit risk, and knowing that we have a volatile asset underneath us with Bitcoin, we've always been incredibly measured about debt. So, we're a company that has about $2.5 billion on balance sheet, about $1 billion of which being in Bitcoin. And we only have about $50-60 million of total debt on the company. And, one argument is to say that's under leveraged. But what it is we've been very cautious. If you look at what happened during the last bear cycle, we bought a lot of assets from distressed miners who took on too much debt. And so as we've ended this year, there's been this great convergence where the convertible bond market suddenly opened up for miners. And that was really after the election. There were, you have to recognize that in this bond market, what it is it's a piece of debt that can only be held by large qualified institutional buyers. And they can actually trade them between themselves. But again, so it requires a high level of sophistication to own this. And so you have these huge portfolios, and they have mandates to deploy capital, but they also have mandates to only take the credit risk side of this, even though it's a hybrid instrument. And so as part of that, with the uncertainty around the election and what an administration's view was, because again, Biden had been pretty outspoken about his views on the space, and it meant it was going to be an uphill battle for 4 years, or there was going to be some tailwinds for 4 years. As soon as the election closed, suddenly the market opened in a new way. And, we saw, MicroStrategies and about, any miner that had liquidity and of scale was able to raise significant amounts of these convertible debts. But for us, even when that market opened up, we wanted to be slow into the space because we wanted the right deal, the right size for our company. An important part for us is as a 0% interest rate. That means the debt holders are not earning any interest. We view that as very important to our ongoing cash flows. But we also wanted to structure it in a way where we controlled a little bit of the payback timing. And so it's 6.5, or it's actually 5.5 years for its due date. And the investors have the ability to basically ask for their money in 3.5 years. We're very comfortable in those timelines. And that instrument where they can ask for their money early is actually the reason it has 0% interest rate, while pairing it with the underlying value of the stock that it could become. So those two pieces, you end up with, mathematicians that go in the back and, do their actuary work and decide it has enough value. But again, we had to be an incredibly high quality company while being very comfortable and have the credit risk profile to have the ability to, pay these debts back. And that's ultimately what we're doing. And we want to grow without the dilution from equity. That's really important as part of our strategy. We couldn't get to where we are today without equity financing the accretive growth that we've done. And we were 300% last year. So you look at all the capital that we raised about $1 billion of capital, and we put that all into growth. Now we're raising $650 million. We did a stock buyback and a cap call, which we can get into as little or as much as you want. But again, the goal was to actually reduce our share count and increase the conversion price. But what that results in is about $400 plus million that we're going to use to grow. We didn't buy Bitcoin. And I'm going to tell you why we didn't buy Bitcoin, even though almost every other convertible note that you read about, they either used nearly 100% of the proceeds for Bitcoin, or they included Bitcoin as a potential use of proceeds. We didn't. And we didn't on purpose because we believe in our ability to produce Bitcoin at a low cost. Our base cost of producing Bitcoin is about $36,200.
Wow.
And so you have to ask the question, if I can do that with my power cost to produce Bitcoin, why would I go out and buy Bitcoin at $104,000? Because again, it's a bet in ourselves that we believe will continue to be able to do that on a long-term basis. We also see it as an advantage. All of our peers went out and bought Bitcoin. They're making a one-time trade. Bitcoin goes up or it goes down, and that will be the net benefit of that decision. What they're not doing is they're not investing in their own growth. Now, I see that as having two factors. One, that means hash rate goes up slower. Good thing for us as the miner that is growing their hash rate faster. But also, do they have confidence in their business plan, their ability to replicate what they're doing? We're replicating what we're doing across 28 data centers. And many of our peers have 1, 2, or 3 data centers with varied results of mining. And so again, we're just that confident on our ability to replicate what we've done over and over again, that we think the best use of the capital is to put it exactly there. Now, some of that capital is going to go to keep Bitcoin on balance sheet. And how we're going to do it, though, is by paying the power bill. So we're essentially buying Bitcoin at $36,000, and that's how we're doing it. It's because we need 163 million to get to 50 exahash from where we're at today. The balance of it's going to be operating strategic additional growth beyond 50. But that operating capital we view as buying Bitcoin, but buying it at the cost of our production, not at spot prices.
Unbelievable. Do you know, I have, the second it was announced, I mean, it's only 21 hours old from your Twitter page, but you wouldn't believe the amount of people that have worked out all kinds of calculations, and we won't get into them all, in regards to what kind of a yield this is going to bring, why. The overwhelming majority of people that have came to me with various formulas of how they're working things out is that actually this was a very smart choice. And you outlined a number of reasons why you think that's the case. For example, you're getting that edge on your competitors because they're going and buying Bitcoin, not upgrading their overall facilities, which is going to give you a greater share of the overall network. Also, it's a very risky, I say very risky. There is a lot of risk with buying a volatile asset like Bitcoin. If it doesn't go your way, it doesn't go your way. And actually, okay, with these convertible notes, you essentially have an option on the Bitcoin, more of a long-dated option in many cases, but there's still a lot of room and margin for error there. So I absolutely love the approach. Initially, I think some people were a little bit like, okay, well, why haven't they gone out and bought Bitcoin like everybody else? But actually, it makes perfect sense for a Bitcoin mining company to focus on mining Bitcoin, not becoming the next micro strategy. And I think that's going to perfectly bring me on to the fact that you guys actually still hodl a lot of Bitcoin, none of which you've bought, and that is all actually mined by yourselves. I think it was, I was looking on Bitcoin treasuries, nearly 9,000 Bitcoin. Is it something like that? Maybe you can help me out on that figure.
Yeah, at the end of November, it was about 9,300. And we are putting, like I said, we're using capital on our balance sheet to every time we mine a Bitcoin, instead of selling it to pay our bills, we are keeping it on balance sheet and then using the capital already there to pay the bills. So we're adding about 98% of what we mine every month to the balance sheet. We're quickly approaching 10,000 Bitcoin at the rate at which we're producing. And again, we're looking at it this way. We're producing 20 to 22 Bitcoin a day. Almost all of them are going onto the balance sheet. And then as we roll into this growth, our goal and intention is to find ourselves in a situation where we're producing over 30 Bitcoin a day, and the flexibility that that gives us. So again, it's a hard push for growth for us, because we think it's more valuable to produce 30 Bitcoin a day in the future than just stacking it all on the balance sheet today. Because I now own data centers, I now own power contracts, I now own all the underlying assets that produce that Bitcoin. And I'm going to give you a really easy math on the calculus on this. When we measure market caps of miners, we're seeing that value result in, on an exahash basis, anywhere from 65 to $100 million per exahash of overall value that the market places on that. It is more valuable for me to go spend $163 million of capital to grow that from where we're at the end of November to 50, which is about 18 exahash. I'm going to get a better return on my capital on market cap and share price, making that investment, than just making a one-time buy of Bitcoin.
Yeah, wow, I absolutely love it. It had a feel of, I mean, it's sort of 21 hours old, the actual announcement of the, or 22 hours now, kind of closing of this, but there's so much speculation on it. This couldn't be a more perfectly timed interview in regards to getting your thoughts on everything. I think it really does clarify a lot of what's going on. And in regards to the Bitcoin that you have on your balance sheet, you mentioned 9,200 or 300 Bitcoin on the balance sheet. Have you got any plans for that Bitcoin? This is a question that actually I didn't think I'd get as much as I have gotten. Are you planning on doing anything with that Bitcoin? Or is it just, you just want to hold it on your balance sheet for the sort of price appreciation of it?
We have a directional view on Bitcoin, and that's, obviously we believe it's going to go up. But we are strategic versus ideological about Bitcoin. And what do I mean by that? We view it as an important piece of our capital strategy. And, we actually, I believe in timing, not just dollar cost average. And so right now we believe the tailwinds are such that we have a good long period ahead of us to continue to build that Bitcoin balance. But, if we get to a point where we're looking at all the factors in capital and it makes sense to use some Bitcoin because maybe we feel it's plateaued, or maybe we feel it's, at risk of coming down a little bit or doing a retrace, we may use some of that Bitcoin to, buy assets, build the company, pay the bills. Especially if I can increase that by 50%, like we're talking about doing, that it gives us the ability, frankly, to add as much Bitcoin as we're adding to the balance sheet every day to day, but still, use it to fund the business without the need for debt, equity, or anything else. So we're looking at it from that factor. Is there's going to be a time and a place, but what we'd like to do is always be building that HODL balance. Because if we can use new production versus dipping into the stack we built, we view that as a win, so that it continues to grow versus go down, because we do have that directional view on Bitcoin, both short, medium, and long term, I might add. So, but again, it comes down to what you're not going to hear us say is we're never going to sell our Bitcoin, because as soon as we say that, we're now stuck in an ideological view that may not result in the best results for our shareholders. And that's who we have a fiduciary responsibility to. Now, I think that there's a time and a place, and there's entire companies that are now built as really Bitcoin holding companies. And investors are now getting exposure just to ride the volatility in Bitcoin. We think miners can offer more. We think the reason to get exposure to miners is because they do, most of us, have large amounts of Bitcoin on the balance sheet. But we also are the only place an investor can get, unless they mine it themselves, get exposure to Bitcoin being produced at lower than spot prices. So we think that, again, intersection points is kind of the theme on this. We believe being at the right intersection point of that and always being strategic about it is the right move. We are adding a digital asset management group to the team. We've been talking about this for almost a year as we've kind of built the underpinnings, again, because we're cautious about it. We don't want to see any sort of repeats of what we saw a lot of the industry do. We had no exposure to it, but a lot of people lost their Bitcoin because they gave them to other people to generate yield on. There's other ways to generate yield, and we want to manage it ourselves. That could be selling a long dated covered call that we take a very small, premium on, but the Bitcoin is never sold because, Bitcoin doesn't go up. We're also very interested in capital preservation, buying, derivatives that protect the downside. We think that that's probably more important to do than just, try and get a few points of upside. Because again, we think that the biggest piece of upside long term is just the Bitcoin appreciation. You don't want to risk the golden egg over 2 or 3 percentage points, but you also shouldn't ignore the 2 or 3 percentage points when you have $1 billion of an asset that's just sitting around. I think, and here's a prediction I have for the future, is you go 4 or 8 years out in the future and Bitcoin miners they're going to be running 2 businesses. One is going to look like a Bitcoin mining company and the other one's going to look more like a hedge fund, because there's going to be such a large amount of assets and you're going to have to treat it like its own business entity where it's generating some target yield every year. And, some of the most successful hedge funds can be very conservative and produce, 7 points of upside a year. I think that when you start to talk about Bitcoin miners having $1, 2, 3, $4 billion of Bitcoin in the balance sheet, that's going to be an important part of the strategy. But again, we're going to crawl, walk, run in this. We're not going to bet the farm on any one thing, but we do think it's going to be an important part of the business in the future.
I 100% agree with how many Bitcoin mining companies are going to look in the future. If you've got that amount of value in an asset, I mean, there's a lot that can be generated from that. It's how you do that in that safe manner. And I also love your approach to Bitcoin and the holding of it more broadly. There is, I think, a kind of blind belief that can often get people in trouble. I think you need to be a lot more nimble than that. Certainly as a company that has shareholders and that is trying to maximize the value for those shareholders, you need to sort of explore these strategies and not just sort of adopt an up only, that's it sort of approach, which I absolutely love. And as we're so close to 2025, what are some of the things you're looking at in 2025? I mean, I think it's going to be a exhilarating year as far as this whole space is concerned. But for Cleanspark, what are you guys looking at in 2025?
For us, it's going to be about getting to 50 sooner rather than later, because, we're talking about the most scarce asset, most valuable asset in the world. And the quicker we can get to our milestones is the quicker that we can, capture the value. So for us, we're going to have heads down. Now, as much as we're going to have heads down on building and out our Bitcoin mining infrastructure even further, I think what the year looks like is a year full of tailwinds. We're going into it in the US, an administration that has made some big promises. And I don't even think they have to deliver on half the promises to make this a really great year. For me, I look at, there's so many things that, everybody's talking about the strategic reserve. I would argue that even more important than the strategic reserve is something like there's a staff accounting bulletin that was approved by, the state or the Senate and the House, that was then vetoed by Biden, that was going to allow banks to hold Bitcoin and digital currencies. And I think that becomes a new on-ramp, because I think that the administration will now wave it through. And when that happens, just think of everybody that has, money in their bank account and, they got a money market and they have a CD. Well, now they can just click a button and they can now buy, a tenth of a Bitcoin, right? That is going to be as powerful as anything else that happens this year. Again, supply and demand economics is really the underpinning of Bitcoin. And so there's so many things. That's just one example. I could think of 10 things that will affect that positively in the coming year. And so I'm just looking forward to seeing how many of those dominoes tip to really provide what I think is going to be a big boost to the value of Bitcoin in the coming year.
Yeah, we're seeing an avalanche. And that's very interesting. I think a lot of people are very focused on the strategic reserve. They're not focusing on some of the other things that are going on that perhaps have larger ramifications. And I think banks actually being able to offer that service, it's very interesting when you look at the inflows into ETFs. A lot of them are new customers that are actually choosing to, or the overwhelming majority are new people to the ETF arena that are choosing to open up accounts with the likes of BlackRock, with the likes of these institutions, perhaps because they trust them more to get exposure to Bitcoin. You can only imagine that that's going to continue with the sort of more commercial banking sector. And we see banks like Revolut sort of making that pivot, and many others out there, perhaps not in the US, but further afield. Zach, I know you're a little bit short on time. So we're going to wrap things up there. What we're going to do is leave a link to where people can find out about Cleanspark, where they can find out about the new announcement, websites, Twitters, everything in the description. This has been an absolute blast, Zach. Really hoping we can get you back on sometime in the future to talk more about Cleanspark. Thank you very much for coming on.
Hey, thank you for having me. Appreciate it. It's been great.